Hi everyone, so today I am going to discuss about the IPO, initial public offering. Most of the people knows about this. So this video is for them who are not aware what is an IPO. So here is the list of the companies. You can search these companies IPO. These are available in next month or this month. You can check online. So what is an IPO? If I can tell you in a simpler word, when the shares of the private company are made available to the public, then it is called an IPO. So there are certain requirements from the Security and Exchange Commission (SEC) to hold an IPO. So every company, every private company can't apply for an IPO if they are not fulfilling the minimum requirements. So an IPO allows a private company to raise a capital investment from the public. So before an IPO, a private company will be having a very small number of shareholders and the founders. So if you are an informed investors, then you can make a profit by investing in IPO, but all the IPO are not profitable. So you should take a decision and you should do a thorough research on this before applying into an IPO. When the company apply for an IPO and public purchase their shares from the initial public offering, so the money from the public transferred to the company, and this is called the share capitals. And shareholders who is purchasing the shares of the company, they will become the owners of the company. So some shares they have purchased and they have become the owners of the company. So an IPO is the largest source of the fund for the company. So from an IPO, the company will make a largest source of income and they can deploy this income into their business. So that is the purpose of an IPO. Before going forward, I am going to tell you one point. Here I am not going to explain you the pricing of an IPO and the processes involved into a IPO creation. So company can create an IPO, and what is the process to create an IPO, that I am not going to tell you in this video. Maybe some other video I will tell you that also. And pricing also, how an IPO is priced, initial shares, what price should be for initial shares of a company, that also is not part of this video. I can explain you in some other video. So purpose of IPO is, primary purpose is to sell the company's shares first time to the public and raise a fund from the public. After selling the first share to public, these shares can trade into the stock exchange. The price can go up or go down. So IPO second purpose can be an exit strategy for their investors, early investors like angel investors or their founders, so that they can sell their shares to public and they can make a profit on their early investment, and they can exit from the investment and from the company. So this is also a purpose of an IPO. There is some disadvantage also involved in the IPO. So first disadvantage of a public company is their maintenance cost. So if you are a public company, then there are some requirement you have to fulfill by SEC. So one of the requirement is that every quarter you have to show your results. So you have to disclose your strategy also to public, and by doing this, maybe sometime what happen, their competitor may get the advantage of their strategy and their balance sheet. Next disadvantage is for management of the public company, because the share price sometimes go up and sometimes go down. So the fluctuation in the share pricing, that disturb the management. So their work focus can distracted by the share price, because every quarter you have to show your results, but share price every day can fluctuate. I believe I have given you a brief introduction about the IPO, and if you are willing to apply for any IPO, here is the list. Before applying, just make sure you have read all the documents carefully, and based on that you should make your decision. Thank you for listening. That's all for today. Thank you.